A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Welcome back, PI listeners. This is John Fortes, and I'm happy to be your host for the Passive Investor Show. As you know, we talk about real estate, how we invest in it through syndications, and we educate you on different practices and different models about how to go about it. Well, I like to emphasize, get to know the sponsor and get to know people. So start connecting and reaching out to people. I like to bring back Tom Suvansri. I always butcher your name, but I think I got it that right that time. But Tom, man, great to have you back. I appreciate you. Welcome back.
Thanks a lot, John. I'm real excited to be back. Seeing some great things coming out of this podcast. So I appreciate you bringing me back on to share some more wisdom.
Awesome. Tom, we had you on a previous episode. If you don't know what we talked about whole life insurance and the practices and basically the best practices on how to go about it. We literally just touched the overall. We gave a broad 3,000 foot overview on that. And I brought Tom back to discuss more into that. But before we do that, Tom, can you refresh us on your background and how you got into it?
Yeah, so I had started my practice a few years ago, and a lot of it was centered on what I had experienced as a client in the financial space. And I found it not to be to my liking. I felt like I had less control over my own money and sort of looked into what else were other people doing? What were the wealthy people doing with their money? And how did they manage it? And they weren't managing it the way I was being taught. And so I sort of explored on my own other alternative approaches. And I sort of through my own experimentation, found ways that really worked and gave me the control I was looking for. And so now my practice is really centered around helping families, business owners, certainly real estate investors who are looking to take that control and identify areas where money is actually potentially getting away from them, so they can keep it and use it for their own benefit, for their families and businesses. And I have found that in terms of storing money and creating liquidity and financing options, using life insurance strategies have been the best I've found, right? For a whole host of reasons, from a tax, from a perspective to financing. So that has been a portion of my practice that I love to share with people and open up their eyes to something most will never share with them.
Oh, thank you. I love that. You touched on a few things that really resonated with me. What do the wealthy do? I love that concept. And there's basically someone famous that really practiced this type of model, what we're talking about, right? It's the Rockefellers, right? So can you dive into that?
Yeah, sure. And there's a lot of great resources I can share around this too. That when you went back to the Rockefellers and you compared them to, say, the Vanderbilts, and you look at the wealth that's been sustained over generations through the Rockefellers, there's a lot of great practices that they used compared to the Vanderbilts, who today didn't have anyone who's a millionaire. Through all the wealth that they had back in the day, it just dissipated away over their families. And so from a Rockefeller perspective, one of the key things they try to keep their money within their family. And they create these concepts of family banks. And so the way that they do that is obviously sustaining businesses, which we know is a big part of creating wealth, building your own business and managing it. But for everyone in their families, they have whole life insurance to help perpetuate wealth and create them for future generations. And so if you ever looked at what they do when a someone passes away, their death benefit gets pulled into their family environment, their family bank. And and so it keeps the money within their family to use for business ventures, for education, for whatever purpose that helps sustain their family. But when a new person comes into the family, a birth of a new son or daughter, they create a policy on that person to help perpetuate this building of a family bank and protecting what they believe is the most valuable piece of their lives, the people in their family, in their business. So the human asset value that they protect. And so they use this as one core component of their way to perpetuate the wealth in their families for generations to be. And right now they're extremely wealthy billionaires still happening in this world because they saw this as an integral way to help perpetuate their wealth for generations.
That's awesome that he had the foresight to start this. It reminds me of, I believe, Walmart. The owner of Walmart, before he created Walmart, he started an estate planning and visualized that beforehand. And he saw that before Walmart even grew to what it was or what it is today. So I love the fact that it's foresight and basically design planning for your family down the road.
Yeah.
Can you break down basically what the whole life policy is, and can you throw in exactly how you could put in protections and I believe what they're called is I forgot the term for it, but you could like the disability just in case
Yes.
something happened.
Yes.
Yeah. What is
Yeah.
that
Yeah.
term for it?
Oh, yeah. The disability waiver premium.
Yep.
Yeah. And so
Yeah.
this is, at the heart of it. And when you think about life insurance, it's protecting your life and your ability to produce on this earth, right? That's the core of what it is. And it does a great job with that. And that's why, and it has massive amounts of tax benefits for it because the government wants you to have this, protect you and your family, right? So that's a heart of it, from the death benefit being tax-free to the cash value inside growing tax-free that's accessible. But what comes along with it are these pure protections, right? If you get disabled in your lifetime, which is a highly likely scenario, more so than dying early, they continue to fund this on your behalf while you're disabled. So it adds the extra layer of disability protection outside of just if you died early or prematurely. And there's other protections down the road where people are not thinking that far ahead, like even long-term care protections that you could utilize in retirement. So these are all these layers of health and death and income protections that go beyond just the cash value buildup and storage of money. And that's what a lot of folks are never really exposed to or think about, because you'd have to pay for those if you needed them outside, right? Whether disability or long-term care, these are built into the sort of the design of the policies outside of the use of the money for financing and build up of tax-free money. So it's amazing tool, very flexible, and can serve so many purposes using the exact same dollar. That's the beauty of it. Getting your money to do more than one job is the thing I help teach my clients to think about, instead of just plunking it into one thing to do one job. For like a 401k, you put it in there, it does one job, and you got to wait for it to do this job for decades, depending on where you are in your lifetime. So we try to think very broadly about how to get your money to do multiple jobs and create more efficiencies in your life.
Thank you for explaining that. And can you just break down the difference the differences between a whole life policy and just storing cash in your bank account. What's the
Yeah,
difference?
and this is where the people use this thing, life insurance, whole life insurance, and they call it a bank. It clearly isn't a bank in the regulatory sense, but it can very much act as a financing arm. So if you think about a bank where most people funnel the vast majority of their money first, that's where it goes in. You're storing money. And back in the day, it used to be where they charge you to store money for a little bit of your cash, and so you can always access it. But they quickly found out that they could actually make money off of lending that out to somebody else. In a transition to you storing your money, you get some interest, but they're using that money somewhere else, right? So you earn 1% on your bank account. They're going to loan that out potentially 5 to 10 times for double that or more, and continue to make money off of that. So for the actual depositor of that account or owner, all you're getting is interest and liquidity. So there's not a whole lot of other benefits that come along with it. It actually benefits the bank way more than us. On the second side, if you think about all the needs we have from a financing arm, you can use the whole life policy for that safe storage of money in a tax efficient way. But then you get all those benefits that I shared around your health, your disability, all that. But you get a private account that gives you the option to utilize the cash in those accounts for whatever you need, whenever you need it, contractually. There's no government sort of oversight to that. They can't control that. That's a private contract between you and a life insurance company. Now it becomes a potential financing arm that you can use at your discretion, and you control all the terms of the loan other than the interest rate. So when you pay it back, you can pay it in lump sums, take months off if you want, depending on what's happening. You now control that financing arm, which is such a vital time, especially in times like today. So there's a big difference there in terms of the other benefits that come around it other than the storage of money.
And I had a thought where while you were talking, it's the point of when after you set this up and you start building up your policy or whatever you do,
Mhm.
there's different ways of you being able to utilize it, right? And I think you dove into it a little bit, but can you touch on the investing aspect of it and how it benefits you?
Yeah, and I even use the example of what I've done and sort of my clients are doing. And if you take it from what most people would likely do, and there's nothing wrong with it, but say I had $100,000, I need to invest that, I want to go into a syndication. If I give that $100,000 and it earns, say, 10%, that's what my rate of return is, 10%, right? It has one use, it goes to that, and it's great. For me using it through a whole life insurance policy, if I borrowed that $100,000 at, say, 4%, and I was earning 10% on the other side, my rate of return is not 10%, is 250%, right? So this is how you can leverage and utilize someone else's money to multiply your money and have your money actually earning in your investment, which I'm doing in a lot of cases. But inside the policy, because I never touched the money, I just use it as a piece of collateral. That money is still continuing to grow untouched, right? In a tax deferred and potentially tax free down the road environment. So I can have my money working inside the policy and outside exactly the same time and get higher rates of return by using someone else's money instead of mine, just like a bank would. Does that make
Thank you for
sense?
detailing that. Yeah, it does make sense. We'll dive into that a little bit more, but I wanted to ask, what's kind of like the pain point on people understanding these type of financial practices? Because whole life insurance policy, it's not something I heard growing up, right? It's something
Right.
I heard as I was diving into my own financial education, and that's how I came about it. So how do we break the stereotype, or what's the most common stereotype that you've heard about these policies?
Well, I think if it's the word insurance, that's the thing that I think trips people up. And because we think about, you got listeners have rental properties, you have homeowners insurance, right? and it's an expense that you hope to never use. And so life insurance is tied into that frame of reference. And so when you think of it as an expense, it feels very different versus if it was an asset. And so this is the mind shift that takes a little while for some folks to realize the type of asset it is, because most people are going to associate it's a stroking a check to pay for something that's an expense. And I want to pay the least amount as possible. If you can get your head around and understand the power of the asset itself, it can help shift that. And that's what, for folks who learn more about it and how they can use this in a whole host of ways in your lifetime, very flexible, they see and start shifting away and they say, wow, this is a powerful asset. Now, I would tell you, I would not call this an investment because there's so many guarantees. There's an actual guarantee in it, and you can't actually lose money in it, right? So to me, investments come with some risk. This is actually a financial tool that you can rely on in times of uncertainty. Now it's a certain product, and you can use it in a whole host of ways, but you got to think of it as an asset, not just a pure expense, which is what we're typically taught around what insurance products are. They're just expenses. Well, this is much more than that.
So I know you have a couple more explanations or examples to provide for us. How could we use these policies to build our financial wealth? I know it's a tool. I like to call it a tool. How do we use that to compound our financial wealth? What's the best example you could provide for us?
Yeah, I could tell you something more recently. A lot of folks are doing this who are heavily into real estate. Certainly, take the simple example of buying a single family home as a rental property. And so in a lot of cases, you could take money that you saved up in a bank account and make a down payment. And now that money is stuck in that home, right, as equity. And hopefully it's cash flowing and you can build up that money from that account for that rental property. Well, another alternative to keep a little bit more control of that money is to take a loan from your life insurance policy for the down payment and then get the note for the balance of the mortgage, right, to pay for the home. Now, in this scenario, I've taken my money that's not in my bank account. I took it from the life insurance company. I'm using their money for the down payment and a bank for the balance. And now I actually have little to no money in this deal. And if it's cash flowing, it's just they're earning for me while my money's still growing inside my life insurance policy. And so in this environment, having that control, now my money is within my hands. Once I continue to pay that back, it opens up the door for me to use that again. But I've actually used someone else's money in that scenario to fund a cash flowing asset for me that is going to grow and then open up hopefully more over time. And so that's the power of using it while my money never stops earning. Because as we know, money that's sitting in your house as equity is earning you zero. It's stuck. And I see this all the time with people who have a vast amount of assets in their equity in their homes, but they can't use it. It's kind of just doing nothing for them. Here, you can keep that within your control using the leverage of the life insurance policy.
That seems very powerful, and I can see how people could buy something like a single family home that needs a little remodeling, and then I can see how they can refinance the asset, the cash value back out, and pay back their policy.
Yes,
and keep going and building that and moving that, like moving the conveyor belt down the line, just like that, right? So I think that's kind of powerful. Now, at the end of the day, right? So, how do I pass this on? How do I make sure it stays within my family? And how do I make sure someone's not going to sue me and tap into that? Is there a bunch of practices or things set up that protect me from that?
Yeah, and the beauty of life insurance, and certainly there's state differences to this, but for a lot of states, they are considered protected assets. So if someone tried to sue you or get access to it, they can't. For states where it's not, what you can use is to apply them to trusts. And there are certain types of trusts that protect it completely from estate taxes, as well as creditors who maybe are trying to sue you for it. So there's a lot of options to do that. But for the vast majority of states, you can they stay protected. and there's nothing they can access it. And so there's a lot of folks who were, back in the day of, I think it was Ken Lay, back in Enron days, when all that went poorly for a lot of folks, unfortunately, that the word was that Ken Lay had some substantial amounts of money tied up in life insurance that could not be touched, right? So their family could still use that and it's protected. And so this is one of those assets that is completely protected in most states, but if it's not, you can make it so that your family will always benefit from it, and it's all tax-free.
Awesome. Now touch on passing it down to like the next generation.
Yeah.
Say, the worst case scenario is obviously you pass on, but you set yourself up for success down the road with your family. You pass on the legacy. So how do you dive into that?
Yeah, the biggest part of it, and for a lot of my clients I work with, that are maybe not into this world of passive income yet, but they're migrating there and putting their money into, say, 401k plans, and to help them envision a day of how to use that money, because money has no use, no value until you start using it for something. And so for folks like this, where their vast majority is sitting in an account of, say, $1 million, imagine a day if you had $1 million death benefit on the other side of it. Does that change the way you spend your other money? And the response typically, of course, I'll use more of it, because once I pass, my bucket gets filled up again with the same amount of money. And so this is the beauty of it as you transfer later in life from a retirement perspective and into, your later lives, that it ceases to become income protection. It actually becomes asset protection, so that you get to use the vast majority of your other assets. You can walk away the day before you die with the last dollar you spent and you died. Your family gets the equivalent amount of that money tax-free, so they can live the life they want to live. And so it's a beautiful sort of scenario if that can happen, because, and there's a lot of flexibility in retirement with using these assets that we won't go into today with your other assets, but it is one that people who are wealthy recognize the value of having this asset because of the tax-free nature and the guarantees that come along with it, and what it can do for your entire other sets of assets that you own, homes, stocks, bonds, whatever it is. They make them more powerful. And so the wealthy know this. And so they couple it with that. It's an integration of assets for the benefit of the entire family, and helps you make more of your money and use more of it.
Thanks for breaking that down. I love it. And Tom, easiest question of the day. I'm just going to throw fastball right down the middle, and I know you'll knock it out the park. Where can we reach you? How can we reach you? How can we find you? Where are you?
Yeah, you definitely come to our website. You can go to Tom at Premier Trust Advisors. Reach out to me, set up some time to chat. Love to connect with you. My website at Premier Trust Advisors. Wealth of information there, and love connecting with open-minded people who are trying to control their wealth and do more for their families.
You heard it here first. If you're looking for another vehicle, tool, as I like to call it, to help you build your passive investment strategy, or help you build your passive investment avenue, your passive investment arm, this is the practice right here. This is something I practice, and I believe in the tool. I personally am just looking into how to build it for my kids as well. So how can, a matter of fact, I got one more question, and you touched on it early when the Rockefellers, and this is the last one, and I promise I'll let you go. You said when another person is born, they build another fund or another account or another policy for them. Can you touch on that with kids? So how do you go ahead about starting one for your kid? And the reason why I ask for that is because I see a lot of value in that. If you do it for when a kid is born and they're in college, by the time they're in college, I think you leave them with something that they could either decide to go to school with, play with as an entrepreneur, or just go ahead and use it the way you've always used it and build some passive income. Can you touch on that, on how it benefits you from doing it from when a child is born?
Yeah, it's and you hit on the true power of it is it doesn't matter what they would ever use it for. They can use it for whatever they want, and they get to keep it for the rest of their life. So the most common thing I talk to folks about is saving for college, right? That's always on people's minds. How do I do this? Can I get enough? What if they don't use it? What if they get a scholarship? And I said, well, there's a lot of ifs in there. And I don't like that many ifs in my planning that all have to sort of work out and unknowns. So in this world, because we don't know a lot of things that are coming down the line, this offers tremendous flexibility of your as a savings tool. And to your point, could be used forever, right? Imagine starting and they could use it for 80, 90, 100 years of their lifetime. The amount of wealth could be stored and kept in here under their control. At the time they need it, they can use it for whatever they want, whether it's going to school, whether it's starting a business, investing, whatever it is, they are in complete control and nobody can tell them where they can use it. So that to me is hugely powerful. What they do with it, we teach them how to use it, but bottom line, it's protecting the thing that is the most valuable thing in their lives is themselves and their ability to create and produce on this earth. And so doing that from day one, that was the thing I definitely wanted to do for them. And now they'll have that forever. And that's my gift to them is I leave this earth, they'll have it. That I can guarantee.
That is beautiful. You're basically giving them a retirement plan. I love it. I love the way that it's just music to my ears. It's beautiful. Tom, thank you. You guys, you know where to find them. I hope this resonates with you. I hope you got a little bit out of this. I hope this is another strategy that you can add in your financial tool belt. Tom, any last words?
No, and just open-minded people who are trying to take control, and it's out there and just requires a little bit of seeking out some truth.
Guys, thank you for listening. PI listeners, thank you for listening. I appreciate your time. As always, I hope I dropped some valuable nuggets for you to take away. Till the next episode. Be well. God bless. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to PassiveInvestorShow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.